Hey, what's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel, where we teach you how to become a better investor in the stock market, how to bring in more profits consistently every single time. Today we're going to be talking about the PDT Rule. This is something that you have to fully understand as an investor, or even before you're looking into investing in the stock market. Today I will be explaining all of that in depth, and I will teach you why it is important for you to avoid the PDT rule and how to do it. But before we get started, make sure you subscribe to the Flaming Profits YouTube channel, where we're all about stock market investing and how to make profits through the side. I believe firmly that a wage makes you a living, where profits make you a fortune. So that's why it's very important that you focus on profits. So make sure you subscribe so that you do not miss any amazing videos like this, and make sure you give us a like on this video as well. We do have some amazing referral links in the description for some brokerages like Robinhood. That's my main platform, and you get a free stock as soon as you sign up. Then we have M1 Finance. If you use the link in the description, you'll get $10 for your investments with M1 Finance. Easy as that. Just use the link to sign up. And I do have tutorials on these apps, so go ahead and check it out on the channel. And this is Acorns. You get $5 to get started investing, as long as you use that link in the description. So go ahead and take a look and click on any of those so that you can get registered. Alright, so let's go ahead and get started. So the PDT rule, PDT stands for pattern day trader, and this only applies to day trades. And in case you're wondering what a day trade is, day trading basically refers to buying, then selling, or selling short, then buying the same security on the same day. Just purchasing a security without selling it later the same day will not be considered a day trade. So it's basically buying a stock and selling it the same day. Even if you buy 10 shares and sell 5 later in the afternoon, that is considered day trading. And how it works is you're limited to 3 day trades per week. So Monday, Tuesday, Wednesday, Thursday, Friday, you can only do 3 day trades. And then those other 2 days you can't do any day trades. So if you choose to do day trades on Monday, Tuesday, Wednesday, you can, but Thursday and Friday you can't. You can do it on Tuesday, Thursday and Friday, but you just can't do it those other days. So 3 days out of the week, those are the only times that you can day trade. But if you go above that, they will not allow you to sell your shares. So they won't allow you to day trade anymore after those 3 times. And the SEC, which is the organization that manages stock market investments, they consider day trading to have significantly higher risk than buying and holding strategies. So that's why they created this rule. And this rule requires that pattern day traders must hold a minimum of $25,000 in equity in your account to support the risk associated with day trading. So let's say you do your 3 day trades in a week, but you do one more. So now you did 4 day trades in a week, which they will let you do, but they will give you a warning saying you will be marked as a pattern day trader if you do it more than 3 times. And basically, once you do it the 4th time, you'll be classified as a pattern day trader. And whenever this happens to you, you will no longer have the privilege of buying and selling the stock in the same day, so day trading for 90 days, unless you have $25,000 in your brokerage account. And this happened to me actually. I day traded for the 4th time in the same week, and I didn't know about this rule back then. So that's why I'm very glad that you're able to watch this video and understand this rule, because it really did bite my back, because I did the 4th day trade. I no longer could day trade anymore, and whenever I really needed to make a day trade, I wasn't able to. Robinhood wouldn't let me at all, and because of this, I was up like $500, and I wanted to sell, and because of that, now I'm down like negative $500 on that investment. And that's all because I wasn't able to sell my shares whenever I wanted to. So that's why day trading can be a lot more risky, but very profitable if you're just able to sell when you need to. So that's why it's important for you to pay attention to this pattern day trade rule. And I'm going to show you exactly how you can avoid this rule right now. And there are some strategies that you can use so that this PDT rule doesn't affect you. So I'll go ahead and explain that. Alright, so here we go. So the first and most obvious way to avoid the PDT rule, pattern day trading rule, is by funding your account with more than $25,000. If you are able to do this, you should still be careful, as a drop below the $25,000 mark will immediately take away the ability to day trade. Ideally, you should deposit more than $25,000, but many people won't be able to fund their account with $25,000. Luckily, there are still other ways to avoid this rule. And the $25,000, you can have it invested into other stocks. It doesn't necessarily have to be in your buying power, so just keep a note on that. So the second way to avoid this rule is by knowing the difference between a cash versus a margin account. So another great and very easy method to avoid the PDT rule is by opening a cash account instead of a margin account. The PDT rule does not apply to cash accounts, but note that the other problem might come up when trying to day trade in a cash account. Besides the reduced buying power, your cash takes time to settle, meaning that you can't immediately use the money you just traded with again. Depending on the asset class, that time can take longer or shorter to settle. Options are one of those assets with the lowest time until settlement. So furthermore, there are some other brokers that don't follow the PDT rule actually. One typical example of a broker like Short Trader, these brokers aren't regulated by the FINRA or SEC, and therefore they can avoid this rule. This may sound good, but brokers without good financial regulations can be sketchy, so I would definitely avoid these brokers, even though they do give you the benefit of not following the PDT rule. And usually these brokers are based in countries like Cyprus or the Bahamas, but with Robinhood and M1 Finance and Acorns, obviously, you won't have this issue at all, where they're not regulated by the FINRA or SEC. These are organizations that kind of protect your money when it comes down to investments. So just stick to normal brokerages. I wouldn't follow this example to avoid the PDT rule. So another way to avoid the PDT rule is by opening multiple brokerage accounts. So you have the 3 available day trades per 5-day period per broker account that you open. This will allow you to day trade much more because you can do 3 day trades in Robinhood, for example, but if you have a Fidelity account, you'll have another 3 day trades that you can do with that account. And then let's say you have a Vanguard account, you can do another 3 day trades with that account. So basically, the more broker accounts you have with other companies, the more day trades you can have in total. But this allows you, the disadvantage of this method is that you have to split your money between multiple accounts, leading to a buying power reduction. So you won't have all the money in the same brokerage because you're basically splitting it into all of them so that you're able to day trade more. This is something I'm looking into because it will definitely help me in avoiding the PDT rule. But I think I'm just going to focus on accumulating those $25,000. That way I no longer have this issue. And additionally, you could also trade a different asset class than stocks, since the PDT rule doesn't necessarily apply. So for example, if you're trading Forex or futures, the PDT rule won't apply to you. Before trading any new asset, it is definitely crucial to get the correct education on it first though. So just be aware of that. But basically, in my opinion, one of the best ways to avoid the PDT rule is by holding overnight or just by holding somewhat longer than just a single day. Obviously, there are going to be times where you need to sell that certain moment in time, and that's why I'm still trying to avoid the PDT rule. But basically, if you open a position just before the market closes and close it the next day right after the market opens, it won't count as a day trade, even though you only held it for a very short period. Otherwise, you could also just hold the position for a few days, weeks, or even months. Last but not least way to avoid the PDT rule is swing trading, and this is my specialty. So I love that this is an exception to the PDT rule. Swing trading means holding trades for a few days, weeks, or even months. Instead of staying in a position for a few minutes, you could just approach trading with a slightly longer term approach. There is nothing wrong with staying in a trade for a few days or even longer. It could eventually make you more profits than a simple day trade. So just to recap, the consequence of the PDT rule is that if you place your 4th day trade in the 5-day window, your account will be marked with pattern day trading for 90 calendar days. So this means that you won't be able to place any single day trade for 90 days unless you bring your account equity above $25,000. And that's my case right now with a position that I have. So that's why I decided to make this video, because I thought it would be very important for everyone to know this and realize this before investing in any investment, because it's very important that you realize that you can only make 3 day trades in a single week. So please go ahead and study this. It's something very important that you need to make sure you're paying attention to, as simply as that. I don't want the same thing that happened to me to happen to you guys. So make sure you pay attention to this. And I hope that this video brought value to you. Make sure you like this video and subscribe. I'll see you on the next video. Comment down below if you have any sort of questions or anything like that. I really appreciate all of your support. I'll see you on the next video. Peace.